So, okay, perfect. Everyone on YouTube can hear me. Perfect. Great. Okay, so this live webinar is going to be dedicated, focus on Forex, as you can see now on the screen. And I'm going to try and explain and see several scenarios where I'm going to compare the swing trading versus intraday trading, I mean short term versus longer term in Forex. Okay, so so obviously you know the differences. So I'm going to start with the dollar index, okay, because it's really very clear right now, this one. So let me see something here because I have lost focus of Zoom. And the questions from anyone. I need to check the chat. Okay, there it is. Good, perfect. So this is what we have. So as I have explained in previous Forex analysis, in previous webinars last week and previous week, we know obviously that most Forex traders will never ever look at these bigger time frames. This is the dollar index and this is the quarterly time frame. And we have a huge imbalance on the 3 months in control. So we are expecting with the control of this imbalance on the dollar index, we're expecting swing trading, long-term trading in Forex and intraday to start playing out really, really well. So when we take a look at the daily time frame, okay, we can see new imbalances here in the daily. This was mentioned a few weeks ago, and I believe in one of the webinars we were talking about this one, which is in control now, and look at the reaction. Okay, then we get another one here. Okay, and it's rallying very, very strong. So take a look at, when we take a look at the daily time frame, let's see what happens here. Let's read price action since the demand level on the 3 months took control down there. Okay, very strong impulse on the daily that breaks this high. So now that we know, we should know, okay, if you are not, we should know that the 3 months average demand is in control. So knowing that, okay, one sec, this is a daily. Knowing that, then this is what happens. Very strong rally that breaks the highs on the daily, okay, and creates a new imbalance here in the daily, okay. Tries to reach it and it can't. A strong rally that breaks the high, okay. Another strong rally. Look at the strength of this price action on the candlesticks, okay. Look at the width of these candlesticks here. Two large candlesticks. Then price rallies again without pulling back to any of these levels, which is unfortunate, but that didn't happen. What can we do about it? Nothing, okay? We just cannot be in all trades, okay? And then next, in the beginning of March 2026, the dollar index, okay, is still positive, still bullish. Another strong impulse that becomes an imbalance. And then a week later, during the end of March 2026, the dollar index rallies strongly. So all these impulses, strong impulse, small correction, strong impulse, little correction, strong impulse, small correction, strong impulse, correction, strong impulse. So these impulses and corrections are happening on the daily. Why? Because we have the large time frame 3 month demand level in control. And if you are not aware of this, obviously you will never know why the daily time frame is rallying like that. So once these levels over here, which are swing trading levels, because this is a daily time frame, this is not the 4 hour, the 1 hour, the 15-minute time frame. Okay, hola, okay, here, YouTube, okay, great. So what happens when price reaches that demand level over there? Then this is like a swing trading for Forex, for this index, okay, which is the dollar index. I will make most dollar cross pairs bullish, because if the dollar index is bullish, then the dollar, the dollar versus the any other pair versus the Canadian dollar, which we're going to look now, you're going to see will provide us with short-term, intraday, even scalping scenarios. So what do you think is going to happen when we have the smaller time frames on the 4 hour? Let me go to the 4 hour, and these blue levels that you see are the daily time frames seen through smaller time frames like the 4 hour. Okay, this is the 4 hour, but these blue boxes correspond to the daily. Okay, so I just want you to see. Okay, so what happens? price reaches that level here of demand once and twice, and then here again. And what happened? What do we see? Look at the reaction. So when we take a look, let's say at 1 hour, I will take a look later, okay? The dollar versus Swiss franc. I'm now with the dollar index, okay? So what happens here? The daily demand level is reached, and look at the reaction on the 1 hour. Look at this one. Look at this, almost a hammer, okay? Price action says a lot. Oops, sorry. Where was I? Oh my God, I lost focus on this one. Okay, I believe it was here. Okay, there it is. So the demand level on the daily, that happened on the back in 19th March 2026. Okay, look at this price action. The previous impulse was there. So there is a lot of room for price to keep on rallying. So on the daily, the demand level is reached at about 99. Okay, and what happens? Look at the reaction on the 1 hour. If you're doing intraday in Forex, okay, so this is like a good sign, okay? Why? Because we have a pink candle which almost becomes a hammer, but it's very, very powerful on the 1 hour, okay? But obviously, if you don't know that there is a day that all this here, starting from here, back in the beginning of March 2020, all this blue box is the demand level on the daily, you will not be aware. I mean, you will not take action because a pink candle or a hammer is not enough to make a trading decision because location and context and trend are everything. Okay, a pink candle. Okay, I see a pink candle. Oh, I'm gonna take a trade. No, I mean, where is this pink candle happening? Where is this hammer happening? Where is this price action happening in the smaller time frame for intraday trading in Forex? So it is, the location is correct. If we go to the daily, that 1 hour is happening right there, that pink candle. Okay, and then price returns to that imbalance again. And let me check what happened. There, second time, okay, that it retraces. Look at this, price drops, and you can see new strong bullish price action, another bullish strong price action, okay, another one, and all this is accumulation happening at the proximal line of the demand level in the smaller time frame for short term. And then we start having new impulses, strong impulses, strong impulses, strong impulses, okay, and then the movement gets exhausted and price drops again. So what happens? If you are not aware of these imbalances on the daily, and this happens also obviously on the weekly and the monthly and everything, most Forex traders do not or consider, okay, that these imbalances in the bigger timeframes are irrelevant for the intraday and short-term trading, but I believe they are very relevant because if you know that the monthly and weekly and everything demand to buy large time frames or swing trading are in control, then you can use smaller time frames, intraday Forex strategies in or swing trading strategies that will become or could become long-term. Okay, so a short-term entry here intraday in Forex can become a long-term swing type of trade. Okay, because the strength of these imbalances. So obviously, if you are like trading intraday, you are going to look at the smaller time frames on the 1 hour probably, okay? And now you will see, oh wow, we've got a low here on the 1 hour time frame on dollar index, another low, trying to print another low. So I'm going to go short, okay? Yeah, why not? I'm going to go short because it looks like it's trending down, okay? Depending on the Forex strategy that you're using, this will be trending out and down or consolidating. It all depends on the strategy, okay? So, but this is a 1 hour. But if you are looking at the 1 hour or even the 15-minute chart, okay, what do we have? Well, you have high, 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 low, low, low. We've got an imbalance here on the 50-minute, which played out really well. We've got another one here on the 50-minute that played out really well. But what I'm trying to say here is this. So the thing is, are we going to take a short knowing that the daily is in an uptrend? That's the thing. Are we going to take a long? I mean, They think, okay, this is a very strong impulse and also became an imbalance on the dollar index. Okay, this is also an imbalance. But the thing is, will I buy and will I sell in like one day or a few hours? So that's the problem. Why? Because it means that you know what's going to happen. I mean, it's like it's going to rally from here, you're going to go short from there, you're going to drop from there. So it means that you are not taking into consideration any context, any location, nothing. You're just taking or trading imbalances, or it doesn't matter which forex strategy you are trading. Okay, but you are going short here, short, long, long, long. I don't think that's a good approach. Okay, why? Because you are trading without or ignoring the direction in this forex pair, which is the dollar index. And I believe that if we go to the bigger time frames, and if you know that the daily demand level is in control, and you know that the daily is in an uptrend, then when you take a look at the smaller time frame, you should be thinking of buying here on the 50-minute chart, which is intraday forex entry, and not selling. Make sense? So it's like when you take a look at a chart, you can buy, you can sell, or you can do nothing. Most of the time, you do nothing. You need to wait for the right scenario according to your forex trading strategy for intraday, for swing. I mean, you just need to wait. So most of the time you are waiting. But then when you don't find a setup, then okay, I'm going to sell here, I'm going to buy there. Okay. Fortunately, both of them are playing out. Okay. But it's like, I don't know. I mean, if you go to a pub, you are single, you are a man. Okay. And the same is true, applies to a woman. You are single, you go to a bar and you are with your friends, flirting and everything. So if you are a man, probably you will flirt, or you will want to flirt with women. And if you are a woman, you will want to flirt with men. That's today is not 100%, but you know what I mean. Usually, a man wants to flirt with a woman, and a woman wants to flirt with a man. So, if I am a man, it means I am, let's say, I am trending up. I mean, my trend is I want to meet new women. Okay, I'm single. I'm looking for a wife. So, what are you going to do? You're going to buy. You're not going to sell. I mean, selling would mean like, I didn't find the right woman, okay, to flirt with. So tonight I'm going to go with a man. You know what I mean? No, I mean, that's counter trend. Trading against the trend. If your trend is bullish, because we've got the daily time frame, the daily is in an uptrend, okay? And you know that the daily demand levels are in control, we can use this aspect of this forex pair, in this case the dollar index, we can use it to go long. I mean, I am a man, I want to meet women, so I look for new imbalances on the smaller time frames, and then you get one here on the 15-minute chart, which played out really well, and the reaction was pretty strong. Okay, so that means that if you are a man, then you are going to go with manly stuff. You're not going to go, okay, with women stuff. You're not going to go with man stuff. You know what I mean? So and that's I believe that's the appropriate approach when you trade intraday and short term. You need to pay attention to the bigger time frames, and then based on the bigger time frames, the location, the trend, and everything, then you make a decision. And this is what's going on the dollar index. Let me take a look now, because a guy on YouTube, also on on Zoom, you can, if you want me to analyze any forex cross pair, just tell me. Okay, I'm gonna look at it using the supply and demand, obviously, and compare it when trading short-term, intraday, scalping, and swing. Okay, so the next one I'm going to analyze is the dollar versus the Swiss franc, because somebody asked me to do it. Okay, the euro versus the yen. Okay, so what do we have here on this one? The dollar versus the Swiss franc. This is what we have here. So one sec. I don't know why nothing's loading here. Let me see if there's a problem with the charts. Okay, the imbalances are here. So I don't know why on the dollar Swiss are not loading. Okay, if they are not, I will draw them again. Okay, so Nima, you are asking which supply demand should we use to sell, like the weekly supply demand, and then when we are two daily, or for example, the Kiwi dollar and the Euro, the Euro Kiwi. Well, you are asking things that require multiple time frame analysis and knowing how everything works. So which one? There are rules for that, okay? Very, very specific rules for that. So you are asking like a very general question, which one? It will depend on the trend, etc., etc., etc. So it's not like a very easy answer. It's not easy at all. And then another one, guy, Peter, I have a question about managing trades. Are you managing trades or using you only certain forget? For example, adding positions and selling or to strength? No, I'm not. I'm not doing that. I'm just setting a position, and then once the target is reached, bye bye. Next one. That's it. I'm not adding more. I don't want to be doing that. So, so let me check. So let me start with, this is the weekly, the monthly, and the 1 hour. So on the sorry, daily. On the daily, we've got this one here in control. So that was another area of demand here on the daily. So, and the same thing happens. So what happens? We've got a daily in an uptrend. Since the dollar index, remember what we saw before, the dollar index is bullish, usually, not always, okay? When we have the dollar on the left side of the ticker, then the dollar will get stronger. Not always, okay? And this is happening right now on the dollar versus the Swiss franc, Forex cross pair, but sometimes it just doesn't happen. They are not 100% correlated. Okay, so what happens? Doesn't this imbalance here look more or less the same as the dollar index? Okay, more or less the same. Okay, 1, 2, 3, 4. 1, 2, 3, 4. Price drops, plays out. Same thing. Okay, so imagine you wanna, to be safe, if you take the whole imbalance, okay, I'm gonna use this template. If you take this whole imbalance, this trade already reached like 2x, 2R, reward risk. If you invested, let's say $100, you already made 200 more or less. If you invested $1,000, you almost made $2,000. Okay, is that good for you? Get out. Then you don't. Okay, you can manage your position. Maybe you can add your stop loss here. Okay, and then if price drops, you obviously are not going to triple your investment or double your investment. You are going to be making, well, doubling your investment. Okay, so what happens? So when this demand level gains control, if we take a look at the smaller time frames, okay, what happens? This is the moment that demand level on the daily is hit. It kisses the level. Like this is sometimes I just can't cease to be amazed by by how accurate this can be. Okay, so it kisses the level on the 1 hour. I'm using the 1 hour because I'm talking about intraday. Okay, so what happens? We get here, this is not too much. This is not enough to make a trading decision. This price action here is not like strong enough to say, I want to buy, okay? But here we start seeing lots of reaction. So once this high is broken, look, this void is filled. Another a demand level on the 1 hour is created. This is really strong. Unfortunately, it doesn't pull back on the 1 hour. Still could drop down there. Hasn't happened yet. If we take a look at the 4-hour time frame, which can be used also to take trades, okay, for short term, you can see now that the reaction is like we've got an engulfing pattern, price rallies, breaks this one, and creates a new imbalance in the 4-hour, okay? And the 4-hour, that it tried to reach that imbalance back in, well, a few days ago, 2 days ago, not yesterday, and it just couldn't. It's just trying to rally, okay? So when these imbalance, when we start seeing smaller time frames, new strong impulses, if we go here to the 50-minute chart, we can see when the demand level is hit, we can see, look, this trend, these movements, So we can use these to take a trade, okay? And then you can see the reaction, what happens. Why? Because we've got, remember, why isn't it loading? We've got the demand level, and this is not loading now. I don't know why. Trading view, maybe the uh, okay, it looks like, can you hear me? It looks like Zoom just reset it and closed, and now I'm sharing my screen again. I don't know why that happened. So hopefully you can hear me. Okay. So yes, I mean, uh, position trading is even better because you just forget about it. That's the idea behind set and forget. You just set the trade and forget about it. If this is a good level to trade, just set it and forget about it. Obviously, you need to manage it. I mean, you're just not gonna. I mean, I'm gonna take an entry there and I'm gonna leave that position there for ages. No, you just have to manage the position. Okay, and so. This is for the dollar versus the Swiss franc. Like I said, you take a look at the smaller time frames, and here you can see like only 1 hour, very strong impulse. Okay, this is very poor, nothing, and then we get another strong impulse with two large candlestick bodies, and price drops into this and then rallies again. So we want now new strong impulses. Okay, okay, good. So let's take a look at the euro yen. We talked about this one, I believe, in previous webinars. There was a weekly demand level in control. So the euro yen is rallying as expected. So we've talked, now it's printing new highs, even on the daily. We've got a demand level here, another supply level there. I don't know why these levels are not being drawn. Okay, this is what we have. I don't know why they are drawn there. So we talked about this one, I don't know, maybe that last week or the previous one too. And we were talking, saying, okay, the dollar, the euro versus the Japanese yen Forex cross pair reached that area demand. So this is a swing trading position. Price drops down there. Look at the strength of this impulse. It takes 1 month, probably 2 months, and then back in February, beginning, middle of February 2026, this level takes control and then it starts to rally very strongly. So this here, okay, I'm going to show you the websites so you can see. So we go to the euro yen. Those members of the community that are now online know what I'm talking about here. Let's go to the latest updates. Okay, so the weekly demand level is playing out, trying to play out, trying to play out. Okay, okay. I am updating. We're selecting price to rally over there. New demand level in the 4 hour. We are talking about all this. Okay, and now the demand level here that I'm talking about here. Okay, so this is what's going on. So what happens when these imbalances are reached? Then you start looking. Let me take a look at the 4 hour time frame here. What do we have in the 4 hour? So let me remove this. So we've got a 4 hour demand level here that took control. It was overshot. Look at the strength of this move. It was overshot by, I believe, maybe a tick, a pip. Let me verify that. I believe it was, yeah, by 0.003, nothing. Okay, and then new bullish price action and exploded. It broke out. So the euro yen has now created a new area of demand here in the 4 hour. It could get now, right now it's weak. I hope it gets stronger and then the pullback we can go long. So what happens when price reaches these imbalances? You can go to the smaller time frame to do short-term type of trading. Calling me for, I remember you telling me that this one is on this in one of our Zoom sessions about dating women. Yes. Yeah, it's something I use a lot. Because when I address to men and I talk to them like that, they will understand everything. I mean, okay, because if you are heterosexual and tell you that you are going to flirt with a man, oh, no way, my friend. So then you understand counter trend trading in Forex. Okay, so it's funny. Okay, so what do we have here? So as price, look at this, price reaches that 4 hour level and then strong impulse, another strong impulse, okay, new bullish price action, then we get now another super strong impulse that creates another area on the 1 hour, and then we've got another one over here. So all this is happening because we have the weekly demand level that we mentioned. Okay, you can refer to the previous webinars and the Forex analysis that I'm sharing with you, also on the CAD Gen, the Aussie Gen, and etc. etc. So not all of them are published on the YouTube channel because obviously I just cannot be posting videos every day. But on the community I am sharing. So the thing is that price is rallying, as you can see now, very strong reaction, a new high on the weekly. So then now you can switch to the smaller time frames, as I said before, and you can start using any strategy. Supply. This is an imbalance on the 1 hour. This is also an imbalance on the 1 hour too. Okay, but you can use also EMA crosses, Bollinger Bands, indicators, oscillators. It doesn't really matter. But don't say, okay, the oscillator is oversold, I'm going to sell. No. Why are you going to sell? That means that the weekly demand level is in control, it's playing out. I mean, you are heterosexual, you are a man, you want to be with women, okay? So why are you going to go with a man now? Why are you going to go short against it? It doesn't make sense, you know what I mean? So that's what I'm trying to say. You just need to focus. I mean, I am allowed, if the demand level on the weekly, the daily is in an uptrend, the weekly is in an uptrend, everything is up. Why in hell are you going to take a short on the smaller time frames? Why are you going to say, I'm going to go short? No way. No way. Okay. But most traders, they do in intraday because they are not aware of the big picture. They don't know that the weekly demand level is in control because they believe that in Forex trading, you don't need to pay attention to the bigger time frames. But if you do, then you will be profiting of these huge rallies. Probably you rally a little trade here, another there, another there, another there. I mean, every single day or every 2-3 days, you're going to get a nice intraday trade, okay, in this Euro-Yen Forex cross pair. But if you say, okay, I'm going to go short, I'm going to go short, I'm going to go short. Why? Okay, here I am a man, I flirt with women. I am a woman, I flirt with men. Okay, this is long bias, demand in control, bullish bias, uptrend. I buy, I don't sell. Sell means that I go against my nature. And my nature is I buy because demand is in control. That's it. You are asking about the Kiwi yen. I am not analyzing the New Zealand Japanese yen yet. Okay, let me go step by step, my friend. Okay, so this is the Euro yen because somebody requested the Euro yen before. Okay, and so somebody is Pablo. Good evening, sir. My apologies, I'm disturbing. No, you are not disturbing. I just realized that I actually know very little about this because the one I learned a few years ago wasn't actually great with a 50-50 win rate. But you, on the other hand, seem to understand better. Is there any way I could take my time and learn this exact system via YouTube PDFs or anything else? Well, there is a course. There are courses. Let me paste the website here. And there you can join the community, you can learn step by step. That's where you can do it. Okay, it's here. Pedro. Check the website, our courses, education, trade ideas, etc., etc., etc. So let's continue. Good. So let me be clear. Okay, let me be clear. We've got demand in control, uptrend. If you want to go in the bigger time frame, so swing trading versus intraday trading, this is what we are talking about in this today's live webinar. Okay, so first of all, my humble opinion. Okay, my humble opinion is that if any particular cross pair, Forex pair has a large time frame demanding control, you should focus on the smaller time frames intraday trading strategies and take advantage of this potential move and eventually transform a short-term intraday into like longer term. If you want to do that, because maybe you are intraday trader and at the end of the day, 5 p.m., 6 p.m., you close all your positions, all your Forex positions are done, bye-bye, no problem, okay? But only buy. Obviously, don't buy into supply. Buy when price is low here, running, not like at the top, the resistance, okay? The thing is, this is it. So already taking a long, yeah, the Kiwi dollar. So let's analyze the Kiwi dollar, okay? And then we're gonna do the Euro Kiwi because Nima said something about the Euro versus the New Zealand dollar. Sorry, New Zealand, yeah. So this is what we have. And I don't understand why the levels are not being drawn. I don't know what's happening with trading view today, but it doesn't really matter. We've got the weekly demand level in control, okay? This level here, if we compare it with the Euro Yen, is more or less the same, okay? So this one is even stronger. Let me switch back to the Euro versus the Japanese Yen Forex cross pair, okay? We've got this level here, the one we drew. This is one only one candle, okay? And when we go to the Kiwi, New Zealand dollar versus the Japanese yen, we've got 3 candlesticks. So now the level took control. So what do we need to do? Buy. As simple as that. So if we go to the smaller time frames, okay, if we go, this is the 1 hour, okay? So let me go like this. I'm gonna use this so we can see where the demand level is. Let's go to the 1 hour time frame, okay? So the moment the demand level is reached, okay? Right there. The first time, I believe, yeah, right there. This is what we have. This is the first time, okay? Then price rallies, doesn't break the highs, drops again, okay? And then rallies again, drops again, and the demand level is still in control. So there are, if you are using any other strategy, you will have also positions. I mean, maybe Bollinger Bands, etc., etc. You can use a MACD, anything. So price is here, then rallies, reacts. And you can see the low here was that first reaction that created, this is an imbalance. This is also an imbalance on the 1 hour. This demand level on the 1 hour was created and was tested once, tested twice, and it has been respected ever since. And this short-term intraday 1 hour imbalance on the New Zealand dollar versus the Japanese yen was hit and is being respected every single time, okay? So what happens here? We've got another area of demand here on the 1 hour, right there. We are talking about short term, okay? This is intraday Forex. So we've got, as you can see here, price rallies very strongly with 2 large candlesticks. This is nothing. This is, I mean, noise. And then price reaches that level. It's been tested a few times. So if you are long, you should have been managing your position or even close it because it's not running as expected, okay? So it's time, I mean, when a level has been hit like many times without even breaking the highs, it doesn't look that great, okay? But it's in long term, okay? Swing, this is a swing position on the weekly time frame because the weekly demand level has taken control. And we go here to the website and I go here to the Kiwi dollar. Let me check Kiwi versus the Japanese yen Forex cross pair. Let me go to the latest update. It's in red, so it's hot. So this is the last update, okay? This is when it was reached, okay? And this is an update that I did back in March 2026. We are trending up on the weekly time frame. So the Kiwi dollar, we're expecting price still trying to reach the weekly demand level. And you see the alert. So now the demand level was hit and the Kiwi dollar is trying to rally as expected. So this is not after the fact. I'm just sharing this. And also members can do that, okay? Hello, ciao Alessandro, ¿cómo está? Welcome, bienvenuto. So it is rallying. Okay, so this is like swing long-term or short-term. Intraday scalping, you can use the smaller time frame. Like I said, we've got these demand levels already in control. The one here playing out. Okay, so it's long bias. Why are we seeing now new highs, new highs, new highs, new highs, and new demand levels in the 1 hour? Because the weekly time frame demand level, which most Forex traders are unaware of because they deny themselves, okay, looking the bigger time frames, which is fine. You have your rules and everything, but you are missing why why these Forex cross pairs are moving. Okay, why? So, oh no, I'm going to wait now because the Prime Minister of Japan is going to do a speech today about the GDP or unemployment rates or whatever. No, 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 I'm going to wait because then it's going to affect the Japanese yen, blah, blah, blah. That's crap. Okay, all that stuff that is happening in the world about news and wars and all type of declarations and speeches and data about unemployment and everything, that's already priced in the markets. Already priced in the markets. Because these guys are professional traders, they and their mission, I mean their goal and their job is to make money. So obviously you don't have access to the tools they have, and everything is priced. These movements do not happen because you or everybody here on the chat, on the live session, buy. You don't even move a tick here when you buy, okay? So this is created by large institutions. This is not created by retail traders. This is created by professional traders, institutions, banks, funds, and obviously algorithm trading, AI, whatever, that are buying, accumulating, and then they get out and realize profits until the demand level is reached again. And now we are in buy mode again, because after a very strong rally, we don't buy. We get out and wait for the imbalance. But if you are unaware of these swing Forex trading positions, then obviously you are going to miss everything. And then you are going to listen to all these guys telling you that the market does this, and then we're waiting for the unemployment rate, blah, 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 blah. If we go here to, I don't know, I used to visit this website a long time ago, Forex Factory. If we go here to the calendar, okay, and we filter this about, we filter by high impact. I think we can filter, search filter, okay, high impact and medium impact. Okay, so today is today, which day is it today? 7th, I think, Tuesday. There is nothing of high impact. Okay, so yesterday Mr. Clown Trump speech, okay, a speech at that. So what did he say? Was it about what? Due to hold a press conference about the Iran conflict. Well, it's always, that's like he's always talking about that. So what happened? Well, you already know. I mean, the dollar index has got, we analyzed this in quite a lot of detail before. We've got the daily demand levels in control playing out. Okay, so it doesn't matter what Trump says. All the war started in a month ago, something like that, maybe here, I don't know. But the dollar index already had the 3-month demand level in control. Is the war good for the United States? Some people say yes, some people say no. I mean, that's up to you, okay? But when it comes to trading Forex, short-term, intraday, scalping, swing positions, it doesn't really matter because we've got a very strong demand level over there and we have to go long regardless of the war, regardless of Mr. Trump's speeches. It doesn't really matter. So just tomorrow, we've got the Royal Bank of New Zealand statements, press conferences, and then we've got the FOMC meeting minutes, okay? So do you think that's gonna move the markets? No. Why should this, whatever they say here is irrelevant? Why? Because we already know that the dollar index has a long-term, long bias, and there's nothing to stop the dollar index from rallying because we have the demand level in control and new levels of demand on the daily, new one, another one, another one, another one. So whatever they say has nothing to do. Okay? Nothing. Okay? It's irrelevant. So you feel offended by this, but some people get offended because I get emails from people, really, I could show you, but for privacy, I'm not going to do it. They really get offended and they insult me that I've been brainwashed, etc., etc. It's like, what are you talking about? I mean, this is my opinion based on very specific rules, and that's it. You can accept them, you can deny them. That's up to you, my friend. I'm not forcing you with a gun on your forehead to believe what I say. Just okay, analyze these videos that I've shared with you previous weeks and months, and you will see what happens. Sometimes, obviously, the trades don't play out. It's normal. Okay, good. So this is the reason for the Kiwi dollar, New Zealand dollar, Forex cross pair is rallying, reacting to the demand level on the weekly. So hopefully, okay, these highs on the daily will be eliminated and it will become a runner. Okay, we've got also a demand level on the daily. So we've got, that was the daily, yeah. The weekly, the daily, everything. So it's just rallying, okay? And trying to reach that monthly supply level, and there's a lot of room for price to keep on rallying, okay? So that is what we have right now. So let's see what happens. So this is the Kiwi versus the Japanese yen. Anybody, I mean, any other, I mean, somebody wants me to analyze anything? So, okay, the euro versus the Kiwi dollar. We've got the supply level in control, but the weekly is no longer in a downtrend. So we've got, I don't know what, okay, I now know what is going on. Okay, one sec. Okay, the Euro Kiwi. Okay, this is what we have. So somebody asked about the Euro Kiwi on YouTube. Somebody said what the Euro versus the New Zealand dollar. Let me see what he said. Which supply demand level of the Kiwi dollar on the unit weekly charts? For example, obviously, this one, okay? On the Kiwi versus the Japanese yen, we have a clear uptrend with demand in control. Here, right now, the downtrend was valid, but then it was invalidated with this candle. It's no longer in a downtrend. So we are seeing a rally there. If we go to the website here, you can see my updates, probably the Euro versus the Kiwi, Forex cross pair, the last. Okay, no signs of bearishness. And today I updated it. There's a new area of demand. Weekly is no longer trending down. New demand level 2. So right now, no shorts allowed. But one thing is no shorts allowed. And another thing is, okay, no shorts allowed, I'm going to buy. I mean, that's crazy. Why? Because this is the strongest impulse in ages. Okay? So it is not we kind of buy here. So if you had to decide between the euro versus the New Zealand dollar, okay, to trade, you kind of go long because you would be trading or buying into an obstacle, very strong obstacle. So shorts, no, because it's not trending down for now, and there's no sign of bearishness here. So this one would be like no shorts because of what I said, and no longs because an obstacle is right overhead. And then when we take a look at the Kiwi versus the Japanese yen news, we've got a demand level, we've got an uptrend, everything here, it's in control, okay? One sec. We've got an uptrend and we've got demand in control. That's, I mean, this is like one-on-one trading. I mean, on the other one, we want to, let me try, let me do this. Let me unsync the symbols. And then I'm gonna, this is here, the weekly. Okay, here I'm gonna use the euro versus the Kiwi. Okay, and I'm gonna use the weekly time frame too. Okay, good. So look at the difference. We've got the weekly and uptrend demand in control. So it's like uptrend, demand in control, buy. I already explained the smaller time frames, intraday, short term in this Forex cross pair. In this one, we've got the weekly no longer in a downtrend. New demand level created, we've got supply in control. So the thing is, the thing is that if we've got the supply in control, it means that we could see this happen, okay? But there is no downtrend here. So there's no downtrend. We need to see something that tells us that this is dropping, and it is not happening. So the difference between the New Zealand dollar versus the Japanese yen Forex cross pair for swing and intraday trading is very obvious. Here, uptrend demand in control, this is what we are expecting. This is the path of least resistance in the smaller time frames. But on this one, since we don't have a downtrend anymore since the beginning of this week, okay, then we cannot go long because we have supply in control, and this could happen, and we cannot go short because we don't have a downtrend anymore. So this one for now is negated, and this one is allowed. Okay, so if you had to choose between the two, which are two New Zealand dollar pairs, okay, then I would have to go with this one, which is also highly correlated with the Nikkei index. And the Nikkei index is rallying with demand in control, which I'm going to look at now, maybe. So, so this is what we have. So let me reset all this so I can go back to my previous charts. And otherwise later I'm going to have a problem. So Nikkei, let's take a look at the Nikkei index. We can take a look at the futures, which is more or less the same as the CFD. So this is the Nikkei index futures. So what do we have here? We've got this swing position on the monthly time frame, which is rallying. Okay, so if we take a look at the smaller time frames, let's go to the 4-hour. Okay, 4-hour time frame here. The demand level, this is like the electronic thing. I believe there's a way to disconnect this or to disable this on the electronic something. Oh well, I'm not going to waste time. Okay, because these purple lines don't like them. Okay, they're very confusing. So let me switch back. Instead of the futures, I'm going to use like one of the CFDs, multiple CFDs, like yeah. It's better. I don't see those stripes, which are not very comfortable. Hello, my friend on YouTube, Irki. Welcome. So this is what we have. What do we have here? So we've got a new demand level here on the 4-hour. Look at the strength of this movement, okay? 1, 2, 3, 4, 5, 6, 7, 8. Look at that. Very strong impulse that creates a new imbalance. And a couple of days ago, back in the 12th of April, tried to drop here, okay? So it just didn't reach it. It still could happen, okay? Now we've got like bearish price action. It could drive the Nikkei index, Japanese index, lower, and from there we might have another entry. But for now, it's just sitting here. So it's like, okay, Alfonso is saying that this could probably happen. I'm going to go short in a smaller time frame. I'm going to do like intraday. Oh, wow, nice, great. I'm going to sell whatever strategy you use for Forex intraday trading. I don't know, but I'm not going to do that. Like I said, if remember what I said about genders, males and females? I mean, nope. I know that the demand level on the monthly time frame is in control. Okay, I saw that where I believe I was here, there. So I want to buy because everything's in an uptrend. So let me read. You change it from the bottom right corner where it says you switch it to RTH. Here, bottom right corner here. I'm not sure, Colin. Oh well, it's okay. It's just for the futures market. So what happens? Oh, when you know, you understand that we've got another one here on the monthly price didn't pull back. When you know that a monthly imbalance has taken control, then you can start looking at the smaller time frames. Okay, look at the reaction from here. Look at the pink candle here. Okay, pink candle, new bullish price action, and now we've got a new demand level that is being created here. So if price drops down there, it could be a nice opportunity to buy again. Okay, but buying right now with these, this is a bearish piercing pattern or dark cloud cover. So buying in smaller time frame, doing short-term intraday forex here to buy because we need to buy. Okay, that's the idea. It's not a good idea to buy with the bearish piercing pattern right there controlling price. It's not a good idea. Okay, so this Forex cross pair is not a good idea to. This is an index. Okay, we don't buy here. We buy here. We don't sell here, assuming this is going to happen. We just sit on our hands because there are better options out there, like the New Zealand dollar versus the Japanese Forex cross pair. Okay, so you just need to analyze the Forex cross pair and say, okay, this one is good, this one is not good, or don't force it, because if you force it, you know what's going to happen. Okay, so the Nikkei index is highly correlated, and there are some videos I publish on the website, okay, on my social media. So it is highly correlated with the Nikkei index. So it means that since Japan mostly exports technology and everything, so obviously they depend on currency exchange. That's the logic behind it, okay? That's like a basic fundamental analysis for the Japanese yen. So they are exporting, so they need a weak, okay? They should have a weak Japanese yen, so because it will be cheaper for other countries to buy from them since they are exporting, they are mostly selling. So all Japanese, Japan's big companies are getting bullish. Okay, this is the index because they're making much more money than they usually do with a strong Japanese yen. So the demand level gains control and we buy again. So this is dragging all the, most Forex cross pair on the way up, like we saw before. With the Kiwi yen, New Zealand dollar, it is moving them to higher grounds. Why? Because the Nikkei is strong and the Japanese yen here is on the right side of the ticker. So it means that the Japanese yen is getting weaker, the Kiwi dollar is getting stronger. So this is like a basic Forex correlation, the Japanese yen with the Nikkei index with the Kiwi dollar being on the red side. So it's like double correlation to go long because the Japanese yen is highly correlated with the Nikkei index and the Japan's economy based on exports. If you want to add some basic fundamental analysis, I'm not a fundamental analyst, okay? But this makes sense to me, okay? So, so the thing is that we've got these on the Nikkei index, on the monthly, and you can wait for new demand levels to go along. As I said before, there is one on the daily, one on the 4-hour, and this is more or less how this goes. So we have time for another pair, another Forex cross pairs. Which one do you want me to analyze using the supply and demand? So anyone? We've done a few, the dollar versus the Swiss franc, the dollar index, the euro yen, the Japanese yen versus the Kiwi, the dollar versus the Swiss franc. So which one would you like me to analyze? Or I will choose it myself. The euro versus the Canadian dollar, we've got a supply level in control there on the weekly time frame. Okay, these charts, I don't know what's going on here, but I have like all my charts are okay. No, it's because of this. One sec. The euro versus the Canadian dollar. There it is. Okay, good. This is what we have. The euro versus the euro dollar, I mean, is the same analysis I did, okay, for the dollar index upside down. And I did this already in the previous webinars. That hasn't changed anything, okay? So this is what we have right now. So this is what we have. We have the weekly supply level in control there. Price reached that very strong. It's quite strong. It's trying to react. Okay. When we take a look at the smaller time frames, well, also on the daily, one sec, we've got this daily supply level in control. The reaction was quite strong, but when we take a look at the 4-hour time frame is now printing new high, another high, and this is nothing. So although the EuroCAD has a supply level on the weekly and the daily supply level in control, there is no sign that there are sellers entering in the market. Okay, so we must wait right now. We cannot go long. Why can we go long? Because we have supply in control. So going long is like going against a huge brick wall. We cannot go short either, because we could have gone short there on the daily, because it's like this is that set and forget type of trade, very strong level. You should be protecting your investment. And it looks like for now, it could continue to rally higher the same way that the Euro Kiwi is doing and the Euro and everything. Okay. So for now, on the EuroCAD, I'm just sitting on my hands waiting for some action. And it looks like a new high like on the Euro versus the Kiwi dollar, since they are highly correlated, new high printed. So for now, I'm doing nothing on this one. Okay, it's not even for short term, because I cannot go short because there is no strength. I cannot go long because we have supply, and this could happen. So I'm not going to force. If we take a look at the smaller time frames, let me take a look at the 1 hour, for example. Okay, on the 1 hour time frame, we've got here a supply level right there. We've got a demand level that was eliminated. So this shouldn't happen in a trend. So not a good idea. So for now, of all the assets of Forex cross pair that I have analyzed, the dollar index is the best one to go long. The euro yen is good, okay, based on this weekly demand level. The Kiwi dollar is good based on the weekly demand level. So we've got like a few, okay? We've got a few. But the euro versus the New Zealand dollar, not good. The euro versus the Canadian dollar, not good for the reasons I have explained. But there are 3 of them that looks good for buying. Okay. So this is what today's webinar is all about. This is 1 hour already passed. I remind you that tomorrow I'm going to do a session on stocks. Okay. A little bit later in time. And after tomorrow on Thursday, I'm going to be doing another, the same thing, short-term and long-term swing trading on cryptocurrencies. Okay, there are some great moves that happen and about to happen, so we're going to analyze some of them. Okay, so make sure that I have shared these links with you by email. And if you haven't, just join my webinars watch list, the newsletter list for the webinars, okay, notifications, or use the links that you will see on my channel on YouTube, and we can see each other tomorrow again, and after tomorrow if you have time. The webinars will be recorded and available for everyone to watch again on my YouTube channel and also on the community. And hopefully you are learning something from this, and maybe I'm preventing you from having unnecessary losses, and that would be enough for me. Okay. I don't do futures. I don't do futures. I do hook calling. I don't do that. So no problem. So have a great day, and see you tomorrow. Bye-bye.